Hi, I'm Stock Investor Davis. Welcome to the channel. We're going to take a deeper look at Air Test Systems stock today, focusing on its earnings per share and price to sales ratio, both currently and based on the guidance management has provided, which in this case will bring us to May 31st, 2024. Then we'll close by applying our findings to its current technical chart. Before we get started, please tap that subscribe button. And if you find this video informative, give it a like. There are chapters below if you want to skip ahead. And if you have any questions or notes, let me know in the comments below. To begin, I have at the top Air's current earnings per share for the trailing 12 months, totaling 71 cents per share. The quarterly earnings making up that figure are on the top right. Once this was calculated, I pulled the company's past earnings and PE ratio results, finding a few items which we will use going forward. First, the company has only recently been profitable. Therefore, we will focus primarily on that profitable time frame of roughly the past 2 years as we make our assumptions and estimates going forward. With that in mind, I then established a range in terms of its PE ratio during that time span. In this case, a reasonable PE ratio range has been established between 40 and 80, also noting that the average PE is around 58. With our range, we then multiplied those figures to its current earnings per share of 71 cents, giving us a fair price range of between $28 and $57. Based on the price today, it appears to be trading at a good price. Moving to the company's current price to sales ratio, we have a similar setup to the previous slide with its current trailing 12-month sales at the top, totaling $81.5 million, and the quarterly sales on the top right. We then pulled the company's current shares outstanding, which is 29.8 million, as of the last earnings report. We divide those two figures to arrive at a sales to shares figure of $2.74. We'll come back to this figure shortly. Similar to the previous slide, I pulled the company's past sales and price to sales ratio results, finding a reasonable range of between 5 and 15 times sales over the past 3 years, with an average of 10 times sales. Based on our current reasonable range and the current sales per share, we're able to calculate that a reasonable share price is between $14 and $41. With the current price around $18, it's a fair price and favoring the buyer side. Let's take a look forward. Looking at management's guidance, they have provided the following projections for its fiscal year end, May 31st, 2024. First, total revenue of between 75 and 85 million, and second, net income to be between 20 and 25% of its revenue. Using this information, we can estimate a reasonable forecast of what to expect in terms of a fair PE ratio and stock price. This of course requires some assumptions on our part, but with the goal of keeping things simple, I'm going to split the two ranges in half and use $80 million in revenue and use a 22.5% net income percentage, which gets us $18 million in net income. We'll also assume the shares outstanding will remain the same, resulting in an anticipated earnings per share of 60 cents by period end May 31st, 2024. Taking this new figure and multiplying it by our reasonable PE ratio range of between 40 and 80, we arrive at a fair value range between $24 and $48, which makes the current price of $18 look like a good buy. Keeping in mind we're making many assumptions and a lot can happen between now and then that we won't know until we know. Pivoting to the price to sales ratio based on management's guidance, we can see the top shaded portion is the same as the previous slide, so I'm going to focus on the bottom unshaded portion. With management's guidance, we can calculate a future projection for sales per share of $2.69 per share. Again, making some assumptions here, such as the amount of shares outstanding, then multiplying this forward guidance to our reasonable price to sales range of 5 to 15 times sales, resulting in a fair value stock price between $13 and $40. The result being that the current price of $18 is within the fair range and favoring the buyer side. As a summary for our earnings per share calculations, at the top we see where it currently stands today, and on the bottom we have our forecast based on management's guidance. Then, as a summary of our price to sales calculations, at the top we see where it currently stands today, and on the bottom we have our forecast based on management's guidance. Finally, to wrap up by looking at the technical chart, I've added some green boxes to highlight areas where, to me, it makes sense to either add to the position in green or take profits in red. Currently, the stock is within our green zone, below our earnings per share fair value range at $28, and within the fair value range for its price to sales ratio. Otherwise, with the stock at $18 after market, it has broken a clear level of support near $24. Points of interest if the stock heads lower are $20 and $13. I like the price. Thanks for watching. Please subscribe.